Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video, I'm actually going to do something a little bit different today. We're going to go over the Fibonacci levels and the ones that you should really be looking out for if you do want to use these. I'm not going to go through sort of why they're there or why you could use them in particular ways. I'm just going to tell you from my experience how you can use them in your own trading and go from there. And first thing first is when you upload the sort of Fibonacci tool. So if you go up into the top toolbar here, you should see Fibonacci. If not, you can go to Insert, go down to Objects, go into the Fibonacci retracement tool. Once you've selected that, you can then drag it onto your screen. Like I said, alternatively, just come up and click the Draw Fibonacci tool, and you'll be able to drag this on your chart. So this is the sort of default settings that you get on MetaTrader. Okay, you get the kind of numbers that you're probably familiar with, and then you get some numbers that you're probably not familiar with. And first of all, I'm just going to go right click, go into the properties, and we're just going to expand or have a little look at what's going on in this little area just here. And first of all, you've got multiple different numbers. Now the most popular numbers are probably the 61.8 tool, 61.8 level, sorry, the 50% and the 38.2. These are probably the popular levels in the market. We also have the 161.8, which is considered to be the golden fib ratio, which a lot of people use for targets in the market. But essentially, it's not necessarily needed. And the reason why it's not necessarily needed is because price is king, okay? So you only want to use a Fibonacci if you're using it in terms of strategy or confluence, okay? So first of all, I'm going to get rid of a few levels here that I don't think you necessarily need. Obviously, feel free to keep them on your Fib tool to test them. But for me, it's not needed, so I'm going to delete all the ones above the 100 level. I'll keep everything else just to show you how you can draw your fibs and things like that. So drawing fibs is real simple. What you want to do is measure what you're doing, it's essentially is measuring the retracement of a trend. So typically, if we were to, let's just say, draw some lines on the chart, if we were looking at an uptrend environment, what you can do at that point is look to draw your fib from, let's say, this area in here down to this low, and the 50% or the 38.2 or the 618 are levels where you're looking for the market to react from. Now the best way to use this, in my opinion, is using it in conjunction with structure already or supply and demand zones. They're the sort of best ways to use the fib, because then it's more of a confluence tool rather than a use to kind of just using it on its own, because nothing really works using it on its own unless you are just sort of trading key supply and demand or with volume. Other than that, you need to be looking to kind of get the confluences in place essentially to go and trade the markets using fibs. So let's just say, for instance, we take this higher time frame on pound US dollar, and this is some analysis that we've obviously done for the Forex Market Outlook, which you can go check out. But I'm going to take a few options here and just show you how you can use fibs in uptrending and downtrending environments. So obviously we have this huge uptrend forming here on pound US dollar. We can see that the market is making higher highs and higher lows in these areas. Now what you want to do is you want to identify where the market is more likely to continue the trend from. Now obviously, typically I look at previous structure highs and lows and supply and demand zones and volume levels. However, you know, if we're keeping it really simple, price has made a higher high here. I would be looking for the market to at least come back down into this zone in order to be a buyer. So what we can actually do is, if I grab the fib tool, we can go from the swing high down to the swing low and measure the potential retracement. So you want to use the include the wicks of the high and the low. You can double click to lock this into place, and essentially what you want to do is see if any Fibonacci levels line up with previous structure. So in this case, I would be focusing more on the 38.2 fib than any of the other fibs because it relates to previous structure. Okay, so this would be the area I would want to be long from, adding structure and fib confluence together. You can see that the 50% and the 61.8 doesn't relate to anything looking left. Okay, doesn't relate to anything, so there's no reason for me to look at those fibs to go long from. Okay, what I want to do is draw that fib, identify the place I want to get long from, and it works really well if you do this from a higher time frame to a lower time frame. What I mean by that is if you do this on the weekly and then you go into a 4-hour time frame, and I just zoom all the way back to that level, what you want to do at that point is then identify what's happening. And you can see down here what happens with price is that it starts to consolidate in this area. Now what this is obviously orders going in at this position. We're starting to see buyers and sellers. We're starting to see a supply or demand zone being built. Obviously we don't know which one it would be until price breaks out, but essentially what you watch at those levels is those change in cycle patterns, or look for the trend to start going in the favor of this supporting area. So once you get this sort of boxed area, you could look for the breakout of that box. You could look for the break and retest of this zone. Whatever you feel comfortable or whatever you've tested, you can look to do at these points. Alternatively, you could look for trend line breaks. So if you notice that price was coming back down into this point and you had this previous structure high here lining up with this previous structure high, you could look to see if the price breaks out of that and then look to trend back up to the 100% level on the fib. Okay, so that's when it works really, really, really well. Using it as a confluence to your higher time frame trading can work really, really well with those two confluences in there. Obviously as well, you can use this for lower time frame opportunities. Okay, so for instance, this move here recently where we had this nice big expansion. Now the reason why price is moving higher from here is because look what happened here in the past. Price finds support here, price significantly rallies from this area, meaning that there's obviously buyers sitting in around this point. Price comes back down and we rally to the upside. Now if I was to grab a Fibonacci tool, I would go from that swing high area down to that swing low, and what I would do here is identify the area where I'd want price to come into that candlestick zone. So that to me is between the 38.2 and the 23.6 fib, just through here. So again, I'd line up the confluences and I'd look at this area in particular as an area where I'd want to be long in the market. If we focus on what the other ones are doing from the 50% up to the 618s, doesn't really coincide with anything, does it? So we can't really typically use that for opportunities. And again, what you want to do here, if you're using the daily time frame, you can go down to the hourly at this point, and we can find, let's just go back to that position in that area, what happens to price. Look at that huge demand coming from this area at that point. Okay, so as price is approaching this level, you want to be looking for those opportunities to trade back to the upside. Okay, so that's the best way I feel that you can use fibs. Now a little secret that you can also use with your fib tool, and one of my favorite things that you can do with your fib is looking at the 23.6 Fibonacci tool, because this level in here is quite crucial to the markets, because it's almost like the last level before price usually makes 100% retracement. Now if price usually retraces 100%, you know, I'd say 8 times out of 10 you'd see this market reverse in the opposite direction. Okay, and you can see that in this sort of area just up here. If I was to move this fib tool and go from the swing highs all the way up here, okay, and at this moment this is the impulse move up, and I was to go and place my 0 at the previous low, the market comes back down into this area. We do get a slight bounce from the 23.6, but as soon as the market closes below it, okay, that's when we start to get the change in trend forming, because the market is almost making lower lows and lower highs at that point, and we see that reversal in the trend. So that's another quick way of how you can use that Fibonacci tool. What I would say, if you are going to use your Fib tool in your trading, make sure you have other confluences with it. I would look at it from trading from a higher time frame point of view to entering on a lower time frame. Use your Fib to add confluence to a previous support level. So just for another quick example, as we close the video out, you can see that we have this uptrend in here. The market makes a higher high. Look where price is most likely going to come in contact with those fibs. So I would say between the 50% and the 38.2 would be a level of interest in this particular area, because it's those previous structures. In this case, if we go to a 4-hour time frame, how does price react? We start getting bullish candlesticks. We see that market break out to the upside. So use that Fib in conjunction with higher time frames, key structure points. Add it as a confluence to your trading if you feel that it's something that you can add. Hope you enjoyed this video update. If you have any more questions, please drop a comment below, and I'll speak to you soon.